Good evening, everyone, and good afternoon, and good morning, depending on which time zone you're in. Welcome to the Conversations on Central Banking. Today, the topic is Central Bank Independence. This is a program organized by the Master of Central Banking program at the Asia School of Business. To introduce the topic a bit, we know that the virtue of an independent central bank is supported by a large body of evidence. This evidence shows that a central bank that can operate without political interference produces superior economic outcomes. Yet, this independence often comes under threat. Our two eminent panelists have been tested by fire, so to speak. They will discuss the various threats to central bank independence and what the central bank can do to preserve this independence. Soedradjad Djiwandono was governor of Bank Indonesia from 1993 to 1998. He was the governor when the Asian crisis struck in July 1999. At that time, Bank Indonesia was not what we would call an independent central bank. Governor Djiwandono was forced to step down, although from all accounts, he was doing a wonderful job in managing the crisis. He has since argued that had the central bank been independent and had been able to use the appropriate instruments for monetary policy and bank supervision, Indonesia would have been spared from the crisis. Martin Redrado had an equally exciting experience as governor of the Central Bank of Argentina. He was appointed president of the central bank in 2004, and in the next few years, he presided over the buildup of the country's foreign exchange reserves. In the wake of the 2008 global crisis, however, President Cristina Fernandez de Kirchner essentially demanded from the central bank around $7 billion of its reserves to help the government finance domestic spending and to service foreign government debt. Governor Redrado's refusal eventually led to his ouster in early 2010, a blow to the independence of the central bank. I would say that this made Governor Redrado something of a folk hero at the Bank for International Settlements, where I was at that time. I think we will proceed chronologically by the date of the crisis that they went through. I would like to start with Governor Djiwandono. 15 minutes or so. Governor, please.
Thank you, moderator, Professor Eli. Ladies and gentlemen, good morning, good afternoon, good evening. I seem to notice some of the familiar faces, and some of them are new, but I feel close partly because we are the central bankers or former central bankers, and we always have good big family on that. I thought that when I was asked to do some presentation, I thought, I can do it. But then after thinking a lot about it, then I'm going back and forth, sort of having some confidence, and then later I go back, hey, what shall I do? Because there's so much things to say, so much things that I felt sometimes being misunderstood publicly. So which one to tackle is very important. And what I'm trying to narrate as this introduction is just showing, maybe partly based on concept and theory, but of course, look historically and putting into test what independent central banks actually means, and the biggest, the test that we should use, as the moderator already alluded to, is looking into what kind of performance that this central bank seems to be having during the either stressful kind of condition or shock or crisis. And I try to show that from very brief description and narration going back more than 20 years ago, what happens in the Asian financial crisis when Bank Indonesia, the Central Bank of Indonesia, when I was actually in my last year of my tenureship, have to deal with the financial crisis that's later known as Asian financial crisis, as also being stated that at that time, Bank Indonesia was not an independent central bank. We will talk a bit about it, but just to show how not independent was at that time, the governor had a ministerial rank and a member of cabinet, so it's part of government. And also that the monetary authority actually is held by a monetary board, which the governor was only a member of, and the board was chaired by the Minister of Finance and some other membership economic ministers. So everything that the central bank at that time has to do, we have to report first to the monetary board. And after the monetary board agreed, then we have to report to the president, because after all, it was a presidential cabinet and authoritarian, etc., etc. But that I would sort of compare to what happens later in 2008, when we also had the ramification of this so-called global financial crisis in 2008 to 9. And as well as what happens after that, the so-called the Great Recession, which inside there was a different kind of crisis in Europe, Greece crisis, and several other countries experienced. And the one shock that happened during that period was the so-called taper tantrum in 2013. And I would just also look a little bit about what's going on at the moment, when all over the world is facing at least two kinds of crisis: the public health crisis, the pandemic that we have been alluding and discussing before the session, which part of the ramification was on the financial and economic crisis. I also have some notes on that. So let me just start it by saying that when we talk about independent central banking, in the end, we also have to go back to the different kinds of independence and what do we mean by independence. Basically, what we mean by independence is that once that institution, the Bank Indonesia or central bank or monetary authority in general, once they make a decision, you shouldn't be intervened, tinkered by any other institution, either the government or the legislative or whatever. That is what the understanding of the independence. But of course, theoretically, conceptually, we kept saying about what kind of independence. I guess I remember Stan Fischer was in his modern central banking, were talking about goals independent and instruments independent. There's so many different kinds, so many studies. Even among the developed economies, there are different kind of things. but in general, the independence was not necessarily the goal independence. Most of the goal of monetary authority is to have a stability in monetary system, whether you measure it by rate of inflation or exchange rate or whatever you, but stability is your goal. If it is not independent, it means determined by the government or both by the government with the central bank, but the independence is usually on how you want to achieve that goal, meaning what kind of instruments you can use. We know that there is a lot of development, but the biggest test, again, is looking into what happens when the crisis struck. And I can see that when we make a comparison between 97, 98 crisis, when I was governor, I felt very much that, of course, the independence of the central bank was not the only cause or the only reason, maybe not even the most important elements of whether you could be successful or unsuccessful. But I felt that that status of non-independent was really constraining so much of what we should do. I could give you some examples. For instance, in terms of, at that time, Bank Indonesia was still having three types of things that we have to take care of. That is the monetary management, putting the stability of the monetary system, as well as the stability of the national currency, the rupiah, but also on the payment system, as theoretically, the financial or the monetary sector should service the real sector, as monetarists would say. The monetary sector is the mirror image of the real sector. That's, we have to deal with it. What kind of payment system that you want to use? And at that time, we were Bank Indonesia was still the supervision authority, only part of the supervision of the commercial bank, but not supervision of the non-bank financial intermediaries. That one was under the Minister of Finance. The problem that I felt was that even when at a time we felt the pressure started to build up since the Indonesian economy was very open since the beginning of the 70s. We were almost like putting things on our head that we liberalized capital market very early. And because of that, everybody can make transaction, can open up account in foreign bank, in domestic, but also in foreign currency, etc., etc. But that creates a lot of problem for the central bank, as both the monetary authority as well as banking supervision authority. One of the problems that we have to deal with because a lot of conglomeration of ownership, big conglomerate, big business group have both bank as well as non-bank. Okay? The banks was under the supervision of Bank Indonesia. The non-bank was under the supervision of Minister of Finance. When we try to scrutinize, to tame or to regulate better the banking sector, the owners can put their money on, like internal transaction between their banks and their non-bank. Again, because we were very free at a time. Almost everything is possible, but just to make a little bit a better leverage on the banking sector. When Bank Indonesia wanted to raise the reserve requirement from 2% to 5%, we have to convince the monetary board so long that in the end everything was too late. And when they said, okay, we have to do it on stages from 2 to 3, from 3 to 5. But in the meantime, the crisis happens in July of 97, started from Thailand, when the Thai baht was under attack. After that, all the neighboring countries, including Indonesia, was attacked very severely. Rupiah was depreciated very much, and we have to deal with it. In the beginning, we have a good mechanisms because our exchange rate system at that time was managed floating. We are sort of floating our currency in a band of selling and purchasing. Whenever the bench was being touched, the central bank has to intervene, either buying up or selling the foreign exchange. Well, most of the time, central bank has to sell because the demand for foreign exchange was always very high as an open economy, because our economy was still more, financial sector was still not really very deep. Monetization was really not really that rampant. So a lot of corporation have their exposure getting some loan from international bank, maybe even feeling much better than getting from the Indonesian bank. That is the problems that we are having to face at that time. Well, again, as I said, since Bank Indonesia was not independent, everything we have to do was, we have to go through stages, monetary board, and then the president. That was including the time when, after we have we came to the IMF asking for standby arrangement. Part of the prior action that we have to do before it was signed by the board was that we have to execute bank closure of the insolvent bank. Of course, everything was prepared by Bank Indonesia as the bank supervisor authority. And we came up with numbers of banks that we have to liquidate, and we did it. First, when the government decided to ask the help of the IMF was because we understand that we need the backup of the international community to get the confidence so that we can deal with the crisis. But it was very ironical that after the execution of the prior action in November of 97, there was big bank runs. Most banks which were still there were under a heavy run. Partly is this. Actually, the first few weeks of the policy, it works well. The rupiah was strengthening, etc., etc. But maybe 2 weeks after that, then it went the reverse. My explanation was that because of still not very transparent world of our economy then, or our political under the Soeharto government at that time, then gossip which build perception in the community is much more trustworthy than the government announcement. So when there were 16 banks were liquidated, people were already questioning. In the beginning, the outside market trusting the way we did, because even banks that were owned by people close to uh, the people in power, the president's family at that time, also was being closed. So it was very credible in the market views. But in the Indonesian community thinking, they were saying that, wow, if even the bank that belonged to the presidential family was being closed, what happens to the other bank? And that's how the flight to safety, again, demand for foreign exchange, to put it either in the foreign exchange account or to put it abroad, was very rampant. So uh, the crisis was going on until in the end, from financial crisis going into banking crisis in general, and after a while it became economic crisis. But after the economic crisis happening a couple of months, then it became social and of course political. As we all know, the rest is history. President Suharto, who ran Indonesia for 32 years, was toppled in May uh, of 98. But before it was toppled, he fired me a couple of months before, partly because of a different kind of call in the public. It was said that our debate between the governor and the president was because people were remembering the idea of Professor Stephen Henke from Johns Hopkins University, who are the champion for the currency board, was advising President Suharto at that time for Indonesia to take up the currency board. That discussion was so much heated, such that a lot of intervention was going on, and I was fighting against the implementation, not because I was against currency board, but I knew that our reserve was not enough to deal with possible run again. And currency board is supposed to be a system that you put there, and should be an autopilot. But the propensity for the president to intervene was so huge at that time. So I know that once maybe rupiah was strengthening, then the family and the cronies who had a lot of foreign exposure will come to Bank Indonesia and, hey, I want to buy your reserve. Then I don't know whether I commit suicide or retire. So that is the story. Again, not just because the non-independent central bank, but I could see that had Bank Indonesia had the independence, at least I would have closed some of the banks much earlier than when the crisis struck, because I studied the Bank Indonesia studied some, maybe at that time was only 6 or 7 banks were weak, and we make a proposal to close some of them, but the president was very adamant, don't do it. It is politically not correct. It will be creating a lot of social tension, etc., etc. We cannot do it. Even in April, just before the July things, I repeated my plea, can we do something about this bank? And the president said, don't do it. He was actually ironical. He already said, okay, do it, but let you know, he was facing a new re-election at that time. He wanted to do it after that, but the crisis didn't wait for the Indonesia to do that. The crisis struck first before we do the. So that is part of my notes. When you compare that with the what happened in 2008, in 2008, of course, we were Indonesia also influenced by the global financial crisis in the again as an open economy. But first, at that time, central bank was already having an independent status. It was happening in 1999. Again, partly our suggestion, because during the negotiation with the IMF, we already put one of the point in the banking restructuring, also the independent central banking. It was done in 1999, so that in 2008, when the global financial crisis, financial was already independent, and the coordination between finance and Bank Indonesia and the what you call it, the insurance, the deposit insurance was working well, such that in general we could deal with the ramification of the global financial crisis better. Okay, there was one bank crisis, which until right now is still a problem legal wise, but actually financially, economically, there was not much any problem. In my opinion, partly again because of the status of the Bank Indonesia, but also because of how the Indonesian community learned from the experience of 97, 98. The bank's exposure was much better in 2008 compared to 97. The corporate exposure in 97, 98, they have so much foreign exposure short term, which are the biggest problem for, biggest headache for central bank, was much better into it. And we are not alone. The whole Asia, in the whole Asia, there was no bank liquidation, no crisis, which is very different. In 97, 98, as we all know, the crisis was really attacking so much, and it gave a very bad influence and impact in Thailand, Indonesia, even Malaysia, etc. And the three of all these countries, Thailand, Indonesia, Korea, all of them went for asking for help to the IMF, please stand by. The others were not. Again, those are already historical. But now there are a lot of debate between, so what is the, if you make a comparison between 97, 98 and 2008, which one is bigger? Of course, the name of global financial crisis is bigger because it's global. But I remember Professor Ito who was talking about, we use the parallelism of earthquake. In an earthquake, you talk about epicenter and periphery. In the Asian financial crisis, it was regional, yes, indeed. But we are the periphery, at least Indonesia and Thailand was the, we are the epicenter. The epicenter was from Thailand, moving to Indonesia, and then moving to Thailand, and then go back to Indonesia again to topple Suharto government. Sorry, I think my time is, but let me just jump into what happens of today. When I make a notes of what's going on of today, I must say that the central bank has been much more equipped with its instruments. The compliance of the banking sector has been much better. Most banks are very well capitalized. So the pandemic the COVID-19 pandemic is, everybody was saying, is creating worse economic crisis than ever. I tend to agree with that. But from the very beginning, the coordination of policy, the fiscal and the monetary was working so well. The fiscal policy, this fiscal stimulus, which is so huge, and the fiscal space was not that great. The tax ratio of Indonesia was meagerly 11%, which is so bad, actually. And because of that, the financing has to be done through a different kind of mechanism, that is when the monetary policy, through the so-called new monetary policy, executing the quantitative easing is being done. In my time, there was no such a thing as purchasing and selling corporate securities or bonds of the government. But now those are everything. My only note is that we have to be very careful since even in the developed economies, all this question about this quantitative easing is still huge. I think part of the discussion in our group was looking into the ballooning of the central bank balance sheet, which I think it has not been solved yet. Maybe in our relation, even when Mr. Bernanke announcing to say that the American economy will start getting better in 2013, it was already creating a lot of trouble in Asia. Remember the so-called taper tantrum when the Federal Reserve has not actually changed anything, just announcing, because it seems to be getting better. Let's try to address the issue of this ballooning balance sheet. But even that already creating a lot of trouble, the reflow of capital from our economy to going back to America. So even for that, it's not. But in the last years, what has been going, the increase of liquidity has been much, much bigger than it was in the past. Of course, it's a big challenge for the monetary economists like myself. How come that all this additional liquidity has not been making any dent in inflation? The latest crazy inflation is on the Zimbabwe, when the inflation rate was a couple of million%. But all the others, in my course, I'm teaching a financial crisis in NTU. I have to change, the discussion about inflation. I changed into discussion about deflation. So, but for the central bank, it's still a big challenge, and I still my even advice to my colleague in Bank Indonesia right now: be ready to always repositioning, be nimble, be flexible, or using a little bit sophisticated term, be eclectic, because we are dealing with so much dynamics, much higher risk, and not just risk, but still uncertainties, or even we are talking about FUCA, vulnerability, uncertainties, complexity, etc., etc. So central bank at the moment has to deal with that. But with that, the central bank independence is even has to be treasured and we put that. In my own country, Indonesia, right now, there's still a discussion because it is mostly, I think it's becoming political. They didn't understand much what independent central bank means. Some people were thinking that independent central bank means that central bank can do anything what they wanted to do. No way. To make it explicit about independence is to make, better for the accountability. The central bank still has to be accountable of what you do, at what you are aiming to do, what you're planning, etc., etc. So I've been arguing here and saying that this is something that we have to treasure, and a big challenge right now. Hopefully, uh, it will remain to be an independent central bank. I guess I've been talking a bit much here and there. This is what I would like to say in this introduction. Thank you.
Uh, Thank you, Governor Djiwandono. Fascinating, very instructive about what can go wrong when the central bank doesn't have instrument independence. Let me now turn to Governor Redrado to give his version of events. We're going from the Asian crisis in 1997. Now we're going to 2008, I think. Governor?
Thank you, Eli. It's a pleasure to be here and to be speaking at our central banking seminar. Basically, let me make some broad comments and recommendations given my reading and my studying, my analyzing of basically the literature that we have on central banking, and in particular to put it focus in terms of emerging markets. And then, of course, I will take upon how did I deal with basically the interference from political authorities at the Central Bank of Argentina. In my experience, we need to differentiate first, Eli, the concept of independence from isolation. No, what do we mean by independence of a central bank? Does it mean that it's like a state within a state? Here coming from Latin America, is it like the Vatican State within Italy, the role of the central bank? And that's clearly not the case. So my first view about the issue of independence is that independence doesn't mean isolation. And it is clear that, as we've seen in the financial crisis in 2008, 2009, also now with the COVID crisis, coordination, it's a critical element between monetary and fiscal authorities. Now, as independence doesn't mean isolation, coordination doesn't mean submission. Okay, so coordination with the Treasury, coordination with the fiscal authorities doesn't mean that the central bank should be submitted to the will of the Treasury authorities or to the basically the needs. In particular, when you look at emerging markets, most of us have had fiscal dominance. So clearly the capacity to I see also central bankers around the world in emerging economies like the chief economist of the countries. And so chief economists need to have a general equilibrium approach. You cannot have a partial equilibrium approach. So that means that obviously being at a central bank, independence means that you have a charter, that you have a mandate. Charters have moved and have shifted with the evolution of times. No, if you look at the height of the literature of independence and charters of the central bank, you need to go back to the Bank of England and recall that up until 1993, it was the Treasury that set interest rates in the UK, and it was then given the mandate, the Bank of England, to have an inflation targeting regime and set up the interest rates and have that type of independence. So my first concept will be to stress independence doesn't mean isolation, coordination doesn't mean submission. What do I believe, and in looking not only at Argentina, Latin America, but I always like to look at all emerging markets and emerging economies, central bank, that it is critical that central bankers have independence of instruments. Okay, so of course that the goals of a central banker or of a central bank cannot be isolated from the rest of the economy, and also it has to do with times and the idiosyncrasy and the history of your own country. As I've said before, there are some countries that have a strong fiscal dominance, so it is clear that what you need to do is to develop local capital markets, as many of us have done in local currency, also capital markets, so that you have less dependence of what could be said of the central bank as the liquid corner of public finance. No? So the more you rely on domestic capital markets, the least, and there is also the capacity to use the bully pulpit that we central bankers have in terms of influencing what we call beyond the boundaries of the central bank. That is to say, in order not to have the treasury knocking on your door in terms of asking more funds from you to really finance disequilibriums that each of our countries may have, the development of local currency capital markets clearly is critical. Also, let me say that the concept of independence have clearly varied, and I recall when I started my mandate and in the meetings that we had in Basel, that many, and in particular many emerging markets, in particular more in Latin America than in Asia, they have been sort of narrowly mandated with the goal of inflation targeting, but not looking at financial stability. And you know, from the Asian financial crisis, we in Latin America know by the several financial crises that we had that the target of inflation was critical, but the target also, or carrying or looking in your mandate to financial stability was critical in emerging economies, because if a central banker, as was said by my predecessor, didn't oversee and had responsibility and accountability for financial stability, clearly, as we've seen in the 2008-2009 crisis, it could also jeopardize the objective or the goal of having monetary stability. So clearly, the result of the 2008-2009 crisis worldwide was to expand the concept of we central bankers. And yes, if I may say humbly, that we from emerging economies, we were sort of a step ahead towards our colleagues in the developed world in terms of looking at financial stability, not because we were smarter, but because of the crisis that we had before. It was clear that central bankers need to have that broad view of monetary stability and financial stability. So having said that, also a central banker needs not to have sort of a partial equilibrium, but a general equilibrium approach. Let me go to the case of Argentina and you know, my tenure coming out. You may recall that we had a very severe financial crisis in 2001. So I was part of the governor that made the effort, and I think we achieved that goal of reconstructing the Argentinian financial system and to bring monetary and financial stability from 2004 to 2010. And it was critical, as we have discussed with many of you, at that point, given the volatility that has increased, obviously in the last 10 years more, that central banks have a cushion of foreign reserves in order basically to do counter-cyclical policies. As an economist, I always enforce and support in all of emerging economies to have anti-cyclical policies, not only on the monetary side, but clearly more also on the fiscal side. Some countries have done it very well. some countries that depend on commodities, for example, that clearly set a target of an anti-cyclical fund, when commodity prices go up, that there are savings from the fiscal sector that you could use when commodity prices go down. And clearly many countries in Latin America are very much commodity dependent. So having anti-cyclical policies on fiscal and on the monetary side. On the monetary side, it is clear that the buildup of anti-cyclical policies is done by building central bank reserves. But we clearly had the view that also it's important that when you have open capital accounts and with, in particular, let me go to one of the key challenges that we have at this point is that with the liquidity that has been injected reasonably so, not only after QE in 2008, 2009, but clearly with the massive QE that we have had in 2020, which has been the right response from the developed world. We have an excess of liquidity that will pour into emerging markets, and central bankers will be dealing with the challenge of bubbles that you would have in your asset prices, because one of the key differences that we have with the developed world is that when you have asset bubbles, you have it in one type of asset. You could have it in real estate, you could have it in the equity market, in fixed income. When we have an appreciation of the exchange rate, all of our assets in our country become more expensive and become in a bubble, and therefore having some sort of, yes, flexible exchange rates are very important, but having the capacity to differentiate between volatile or very speculative, I would say, inflow of capitals into our economies is also critical, and having the cushion of foreign exchange reserves to smoothen the trend of money that sometimes gets out of our country and forces to massive devaluation, or money coming into our country and forces an artificial appreciation of our currency. So I saw my role in 2004, after the 2001 crisis, the debt crisis, that the buildup of reserves was a critical one, and giving predictability and monetary stability and exchange rate stability was critical to our economy. So my point there is that it was critical for me, as I see me, so in terms of what should be our role on the job, is to have the operational independence. So if I will have to put one key element that I can, set forth in this seminar, in this conference, as an example of what I believe independence should be, is that we in emerging economies need to have operational independence. And by operational, I mean where to set interest rates, or if you set money supply, to have the capacity that there shouldn't be any intervention from the Treasury if you have to buy and sell foreign exchange. Also in terms of macroprudential regulations, which are critical. One of the key things that we did that fortunately remain was a macroprudential regulation, not to have, not to do the original sin that has happened in many of our economies, that is to say, to have assets and liabilities in the same currencies, not to have assets and liability mismatch. Many of our countries trying to find shortcuts, usually lend in foreign currency while you have people earning their salaries or earning their living in local currency. And obviously when there is a devaluation, that creates a major mismatch between assets and liabilities. So one of the critical elements that we've done in our tenure was to have rules, regulation by which banks in the system could receive deposits in foreign exchange, but they could only be lent to exporters. That there was no way that there could be a mismatch between assets and liabilities. And I would say that the crisis that Argentina has had since 2018, one of the key differences that has been the resilience of our financial system. We haven't had one single bank going belly up because although there's been a massive devaluation since 2018, the dollar at that time was trading at, if you take March, April 2018, before we went into the current IMF program, the exchange rate was trading around 17 pesos to the dollar. Now we have exchange rate controls back, so we have one export and import exchange rate, which is scarce and more scarce, which is trading at 80, and a more free exchange rate is trading at 150 at 160 pesos to the dollar. So that shows that although we had a very severe exchange rate crisis, and again, this leads to my point that unfortunately, when we left the central bank, they started draining out the reserves. And let me go very briefly in what happened in 2009, 2010. The resilience of our financial system by having rules and macroprudential regulations that prevent from having mismatch between assets and liabilities has been probably one of the biggest legacies of my tenure at the central bank. Now, what happened is that in 2008, 2009, because of the capacity and the independence that we've had in terms of instruments and building up reserves, we were able to weather through the crisis for the first time. In the case of Argentina, the 2008-2009 was a test of resilience of our monetary stability and financial stability. Clearly, the buildup that we had in the system of monetary policy, strong foreign exchange reserves, liquid reserves, gave us the flexibility to provide the liquidity that the market needed at a time of high uncertainty. Liquidity in local currency, liquidity in foreign currency, liquidity in bonds by open market operations. Now, when the crisis was over in the last quarter of 2009, and I was actually surprised, it was December of 2009, actually, we were already out. It was a V-shaped recovery in many of our economies. So by the second half of 2009, we were out of the woods. And I would say that clearly the central bank was instrumental in maintaining the stability in 2008, 2009, and allowing the country to get back on track after in the second half. So the government decided, and unfortunately, what happened is politics got into the issue because the government lost a midterm election, and they thought in 2009, and they thought that really they needed to spend more. And where they would look to spend more, they looked to the central bank. And basically, what happened is that the president, by surprise, I was called into the presidential palace in December 15, and they said, well, look, we have this idea. And I said, well, look, let me study. This idea was to use the reserves of the central bank basically to fund public sector expenditure, not only foreign debt, but also local debt. So clearly it would drain out the reserves of the central bank. It would leave, if I may use the word, naked the central bank in terms of operational capacity. And that's when I said, well, this is inconvenient for the country. And if you want to do that, Mr. President, you need to change the law. So please go to Congress and change the law. Unfortunately, she didn't want to do that. So she still tried to do it by decree. What I worked during those days was allowing all the areas, the professional areas of the central bank, give an opinion on that, the reserve management area, the legal area of the bank, obviously the area of operations on a day-to-day basis. And the president got anxious as basically we had all the independent and the professional bodies of the central bank giving a written opinion on the subject. So in January 6th, actually, she issued a decree ousting me out of the central bank. And I said, well, let's see if our judicial system works. So I went to court and I was fortunate enough to find an independent judge that said the president is wrong. And so I was, one day after she ousted me and I needed to leave the central bank, I was reinstated by the courts at the central bank. And the decree by which the president grabbed the reserves was basically also turned down in the judicial system. Basically, what we presented to myself to court to really sell that basically that the decree grabbing the reserves and the decree ousting myself was against the law, and if the president wanted, she could go to Congress to change the law. Actually, the courts told me that I was right, but then we had a strong tension and a public sector tension. The president got very nervous at some point with public opinion. So after the decree of the reserves was turned down by the judicial courts, so I said, well, my role is over, and I basically resigned to the central bank by the end of January. And as a result, what I did is I wrote a book. I wrote a book in Spanish, which was called Sin Reservas, No Reserve, which was a bestseller, and then Amazon. So any scholar that wants to see specifically what I did during those days is called No Reserve. You can see it in Amazon, so you have a day-to-day recount. But the aftermath of that, and with that, sorry that we, both of us, extended in the time that was allotted to us, but unfortunately, the legacy of the 2010 was that the central bank was left with no operational capacity. And as a result of that, a year later, we had exchange rate controls. The fact that the bank was, they finally, when I left the bank, they finally passed the law. The government went to Congress and passed the law with a new a governor that was much more complacent to the political sector. But as a result of that, in 4 years' time, the $50 billion that I left in reserves were drained. And unfortunately, also the political fate, the official party lost the election in 2015. Then we had a new government. Unfortunately, this new government used the liquidity in international capital markets to indebt the country. And so the central bank had strong capital inflows, but unfortunately they were very much short-term. In 2018, it turned around, and again, the central bank is left with no reserves. So the same situation that we had by breaching the independence, by grabbing the reserves of the central bank, has left also the political cycle very unstable. So when you deal with the central bank, when you deal with the resources of the central bank, also the legacy or the moral for political authorities, that is finally backfires, because it leads to instability from a monetary point of view, instability in terms of the exchange rate of a country. And when you have exchange rate instability, you also have political instability. So looking in perspective, messing with the central bank for the politicians was shooting for themselves in the foot. Thank you.
Thank you, Governor. Very comprehensive and very, I would say, very instructive. Not just the concepts of related to central bank independence, but how these things work on the ground. The role of the judicial system, for example, in preserving central bank independence. So thank you for that. Let me ask a few questions that were in the chat. One is very basic. One question is, with central bank independence, to whom would the central bank be ultimately accountable? Is there an easy answer to that? Maybe I start with Martin and then go to Drajad.
My view, Eli, is that it should be accountable to Congress because obviously you are appointed by the president, but you need to be confirmed by Congress, and the accountability comes by you have a charter that it's a law, and you should be accountable to Congress. Also, in your reports to the legislative authority, of course, you need to have coordination with the executive branch, with the Ministry of Economy. But in my view, in my experience, it should be accountable to Congress on a quarter-to-quarter basis. And basically, if the Congress decides to change the law or decides to change the charter, that's where you should discuss it if you have any problems with that. And of course, we all live in democracies, and if there is the will of the people expressed in Congress means that there is a change in the charter of the central bank, then the governor has a choice, either to leave or to continue under the new legal conditions that are set by the legislative authority.
Yes, yes. But Rajad, would you like to add to that?
Yeah, I guess indeed, legally, of course, the accountability to the parliament is to the parliaments. But then I kept reiterating to my friends at the central bank, the legal regulation, the act, is very important, but it's only an act. In the end, it's up to our own integrity, our own professionalism, the capability, etc. If you believe that what you are designing and implementing indeed according to the regulation, and just continue to be doing it very professionally. In the end, maybe you will lose short-term wise. Actually, that's the way I felt when my president fired me. But in the longer term, I felt that I survived the things because our fight, for instance, for the status of independence was materialized not long after I was out from my position, for instance. So I guess in the end, it's really also internally up to the personnel. So that I'm still supporting the idea that most governor of central bank meant by professional technocrat instead of politician.
Thank you, thank you. There's a question that's from left field about digital currencies. Is this something that could potentially weaken the independence in terms of monetary policy, for example? You both talked about liquidity and capital flows, but digital currencies, is this something you worry about? Martin, can you say something about that?
What I think, I'm looking at the People's Bank of China, which is doing a very interesting use of starting pilot projects on having digital currencies issued by the central bank and using them in different provinces. So clearly moving into the world of electronic payments, I think that we should very seriously look at the fact that we need to, in central banks, look at the concept of cryptocurrencies, and I'm not concerned about private cryptocurrencies. It is clear that the role and the credibility that central banks will have will not mean, and as I see now, cryptocurrencies is more like a risky asset that people could have it in their portfolio. If you are more risk prone, as a portion, as a diversification of your portfolio, you may have cryptocurrencies on that. And obviously, as you know, there are such a profusion of cryptocurrency. My view is that there will be a consolidation, as we had with the internet boom at some point, that really you will have a consolidation. Probably maybe Bitcoin could be one of the two survivors looking at cryptocurrencies moving forward. I don't see them as a challenge to central banks because clearly the credibility and who is behind it, a central bank, in order to have a cryptocurrency that is used as a currency, or that could be a challenge to the domestic currency, it has to be a cryptocurrency issued by the central bank. So I think that all central bankers should consider at least having the a paper currency and a cryptocurrency sort of be looked together. Obviously, pilot projects in different provinces. I think that, again, I would like to underline the Chinese experience as probably the one that we need to look more closely in terms of how to deal with traditional currency and cryptocurrency. But I don't see cryptocurrencies as a threat. I don't think they will really challenge central bankers, although my friends that are fans of cryptocurrency always tell me that. I don't see that phenomenon happening. But yes, we should basically incorporate blockchain technology is something that it's really critical, not only for cryptocurrency, but for the whole document system and carrying documents around the world. So I like clearly that technology and how that technology could and may be incorporated to central banking on an operational basis.
So not really a threat, but the technology should be considered.
Exactly.
Soedradjad,
Yes,
what do you think?
I tend to agree with what Captain Martin was saying. The challenge, like the digital payment, is mostly to the banking, the commercial banks operation in general. They are the one who has been challenged by this kind of a new technology of almost like direct settlements of transaction. So the intermediary, which is supposed to be the function of commercial bank and other financial institution, seems to be now competed by this kind of development. So I guess those are whether that will influence the management for monetary managing monetary stability, like influencing the supply of money and what have you. I am not very clear as yet right now, because in my understanding, the way it was like that kind of transition is almost like cleared automatically. So as I kept saying, then that's the competition of the conventional way of payment system through bank procedures, which has to be, through clearing, and you have to have institution to deal with the clearing for banks, etc., etc. But it doesn't really endangering the fluctuation of money supply or demand for money. The other things that they kept saying about the benefit of this new technology is that at this time when we are dealing with the pandemic, with social distancing, cleanliness, washing your hands often, etc., etc. It seems to be this electronic payment was it's like the new God-given kind of means, because you didn't have to deal with the bill anymore, etc., etc. You know, so there are those kind of benefit that we seems to be getting, and since the application is getting better and better, much more popular and cheaper, then of course the process of monetizations in the economy is much faster than in the past. You know, I learned about how the monetization is going fast in Africa. I was for 2 years working as uh, uh, joining the team economic advisor for the Malawi government, so that I have the uh, uh, chance to see what's going on the financial sector as well. And, you know, the use of the handphone for doing all this kind of things in payment and credit and et cetera, seems to be changing so much, which in the end also stimulating the real sector economy well, which is after all what the monetary sector should do to service the need for the real sector. So again, I also agree that the most important is about the technique, the blockchain itself, the fact that the transparency is there, that everybody understand what the transaction is going on. You know, there wouldn't be any double accounting or double use of your asset, you selling twice, etc., etc. It's impossible in a blockchain kind of technology.
Yeah.
So those are not the currency per se, but the technology that is introduced using this blockchain is very important. As in the beginning, everybody seems to be enamored with the Bitcoin. Now Bitcoin is still going up and down all the time, but the system behind it, this blockchain, seems to be there to stay. And I guess all central bank has to really learning well to do that. Maybe to have a better things than change, for, you know, replacing Swift, etc., etc. I'm not very sure. I see more benefit than the cost that seems to be also has to be paid at the moment. That's my view.
I think there's still so many questions, but we're out of time. So I'd like to ask each of you to say a few final words. Let me start this time with Rajad and then go to the Martin.
Well, ladies and gentlemen, it's been my privilege to be able to share some of the things that I've been sort of very close with, part of my interest in, and I happen to, in the last 17 years, I've been teaching in one of my courses that I'm teaching in NTU is Nanyang Technological University in Singapore, is a financial crisis. So I have to deal with this kind of issue all the time. And my advice to my student also, when you study these things, you know, it's really difficult right now to get which is the literature to do that. But there's so much writing by financial journalists, like in Financial Times and many of the things that are so good that we have to look at. And I was even saying that just so that you can read easily, I asked my student to read what do you call it, the books written by financial journalists, like all this picture, what is it, different kind of things to the Rana Faruhar, the maker and taker, and the boomerang, and on all of this writer are very helpful for the teaching of also the function of the central bank and central banking, because it is so important, but it's still a lot of misunderstanding what the role that the central bank in a market economy is actually working. So I thank you very much to be able to share some of what I know and what I'm still confused in this kind of occasion. Thank you, Eli.
Thank you, Padrajad. Martin, a few last words. Martin.
Well, clearly, I am very enthused about working with you, Eli, with governors in this master of central banking, because clearly what we bring is academic expertise and also a practical operational expertise. In this case, we have been dealing with the issue of how do we see from a theoretical point of view, from the papers we have written, but also from our experience, how do we see independence, operational independence that is critical, having the tools to confront the challenges that we have, not moving back, but moving forward, the challenges that we have of this world of immense liquidity that could create asset prices to increase beyond what is reasonable in our countries, and that create a source of stability. So I welcome this possibility, at least now, to have this sort of webinars where we could talk about the different issues. And we were fortunate enough to have this question about cryptocurrencies and how we use blockchain technology in modern central banking moving forward. So I'm really looking forward to developing this unique forum that under the leadership of Governor Zeti we have set in Kuala Lumpur, but it is for the rest of the world, no? Having a sort of a unique program which blends together academia, practitioners, public policy officials in this morning for the Latin America or for the Western Hemisphere continent, the night in Asia. We have tried, both of us, to shed some light on the issue of what we see as operational independence, of having central bank the tools within a general equilibrium approach that we as macroeconomists need to have as we deal with the challenges of public policy as we move forward. So I hope that we have made a contribution to all of us, and looking forward to further developing this unique program that we have in conjunction with the MIT Sloan School of Business. So thank you very much. Thank you, Eli. Thank you for this opportunity to be sharing with all of you.
Thank you to both of you. That was an exciting webinar. Let me just mention that the next one is December 9 with Dr. Zeti and Paul Tucker, formerly of the Bank of England. They're going to talk about building resilience and policy framework. Thank you again, everyone. Thank you, Drajad, and thank you, Martin, for a wonderful webinar.
Thank you. Thank you.
Good evening, good morning, and good afternoon to all of you.
Thank you.
Thank you.